Yo, what's good? Happy New Year to everybody. Hope you had a great start to the year. In today's video, I'm going to cover three key topics. Keep things as short and sweet for you as possible. Firstly, I want to go over market structure. What is it? And what is institutional market structure or institutional order flow? Second thing is I'm just going to show you some trades that I took as promised. I'll show you trades that I won, trades that I lost, why and how. And then lastly, I will finish things off with explaining a bit on compound interest and just like how powerful it is and basically what it means. So yeah, let's get right into it. Cool. So yeah, I mean, to keep things as simple as possible. So there are three types of market structure. Market structure is just basically how the market moves, and institutional market structure or order flow. Institutions being banks, hedge funds, the big players that are sort of pumping in millions and millions of dollars into the market, and these are the guys that really move the market, right? It's not Sharon, Dave, Steve down the road with the £50 or £100 or even £1,000 trades. It's these big institutions with millions and millions of dollars, pounds worth of kind of lot sizes. So the first bit of market structure is your bullish cycle, your bullish structure. So this consists of having an impulsive leg up, followed by a correction, followed by another impulsive leg up, followed by a correction, followed by another impulsive leg up. You kind of get the gist, right? Price is continually moving in that upwards direction, right? We're creating higher highs, lower highs, another higher high, another lower high, another higher high. Okay, that is the first example. Secondly, we obviously have the opposite. We have our bearish order flow or market structure. So we have a leg down, impulsive leg down, followed by a smaller correction, leg down, followed by a correction, and then another leg down. Okay, price is moving in a downward direction. This is called your bearish structure, bearish order flow. Okay, and then the last one is your consolidation phase. So this is basically when price isn't going anywhere. It's just moving in the same direction from side to side, creating these equal highs and equal lows. Okay, so this is telling me that there isn't really any institutions or any banks in the market right now, because all we're doing is creating these equal highs and these equal lows, which we know that our retail traders like to trade, right? They'll be selling off here, buying it here, selling off here, buying here, selling off here, etc., etc. But what we do know that is always going to happen is that the banks can see this. The banks can see what people are doing. They can see how much money is up here above this high, and what they end up doing is they'll end up pumping price in, taking people out, and then coming back down, taking people out here. Okay, this is why we don't trade with the retail traders. Okay, so in terms of what we look for and how we trade, so if we go back to the bullish cycle, so we have our impulsive leg up, correction leg down, impulsive leg up, creating a higher high, down, not breaking that low, and then another one up, right? Within this structure, what we can see is within these pullbacks, there's always specific candles that create this move, and these are called order blocks, okay, or institutional candles. So there'll be a candle, a down candle like this, a red candle, so a candle that is pushing price down. This is where the banks are selling. And then what this is followed by is it's followed by an impulsive bullish engulfing candle. I'll just change this to green. Okay, and then price kind of continues and goes up. So what we look for as a smart money or institutional trader, obviously there's a lot more to it, but basically what we are is we're patient. What we're doing is we're waiting for price to come down to a specific level. In this instance here, this would be our area of interest. We know that once the banks come back, they collect their money from this level. We know that we're going to be making another impulsive move up, right? And this is where we look at setting our trades, and we can kind of get in with the banks and capitalize on the biggest risk to reward, basically. Okay, that's it really. That's all I wanted to explain on this topic. Just a bit about structure. All smart money is trading with the banks, being able to look at a chart, understand when and where there's institutional money in the market. Obviously there's a lot to it to understand that, but this is the kind of basics of it. I didn't really want this channel to be like a what is Forex 101. Like, there's more than enough content online for you guys to go and do that. Like I said in the first video, which I'll put in the description, if you are interested in learning about this and wanting to, you know, really understand this properly and learn it properly, then just drop me a message or drop a comment down below. I'm more than happy to help you out. Okay, cool. So we're going to jump into the market now, into the charts, and I'm going to show you a live example. And then this is a trade that I actually took last week. So already you can kind of see the pattern that I was already just describing, right? We're in a bearish trend right now. This is the daily on AUD CAD. We can see that we've got, you know, high here, come into a lower high, lower low, sorry. Doesn't break this high. This is your lower high. Another low, break these lows. See how clear this is. This is really telling me that we have institutions and we have banks in this market. We've got these small shifts up with these these impulsive legs down. Same here, shift up, impulsive leg down. Same here, shift up, impulsive leg down. So I'm thinking, right, okay, what could we potentially look for here? So this is on a daily time frame. There was this beautiful move here which you could have definitely caught. Unfortunately I missed it, but you know, you don't catch them all, and there's always more trades. So market, like I said in that previous point, we have this candle move up before the big impulsive candle down, which then came back down to create this lower low. Right, we have this lower high up here. So this is our trading range, and what it was on that day. So now what we're looking for, we're looking to see what happens when price comes back up to reacts out this candle. We have a brilliant reaction. We see exhaustion with these candles. You see where price pushes up, and then we have these wicks, so it's pushing price back down. And then we start to make our way to the downside. So I was looking for entries on this. If I look at the 4 hour, I think this is where it was clear for me. So yeah, we have this move down, and what I'm basically looking at while the market makes its way down is these institutional candles here, where we have this little correction of this push up and then another push down. And basically what we do here is we take out all of these lows, and we take out this market structure here. Okay, we have relative equal lows here. So then all I was doing was I was waiting for price to get back up to this point before entering. So if I just kind of replay this, and these are 4 hour candles, right? Like, this stuff doesn't happen. I mean, the way I trade is swing trading, so it's not, you know, you have to be patient. You have to wait for price to come to a certain point. If I just play this out, so price got in here, I marked up my candle, set alerts, whatever. Even if I go to the 2 hour, maybe it looks a little bit cleaner. Yeah, so there's our bullish candle before the big move down. I was simply just waiting for price to move. It then came up, tapped in our areas. I see 3 candles here, all exhausting at this area. This could be a good enough confirmation for you to enter. I had a sell limit, so I entered the trade, and then we started to, as soon as we tapped in, we started to make our way down. So I closed the trade here at 6% because I wanted to take out this previous low, and my weekly target is 5%. So I was more than happy to just close the trade and be done with it. But this actually run on to go and do more than 10%. So yeah, really clean trade. This happens like clockwork. It happens in the market all the time. It's just about being patient and trying to find the right setups. And then I think price eventually is on its way down to mitigate out of this imbalance that I've got marked up down here. All right, so real simple trade. This was a winner. Like I said, I had 6% off of this. Could have easily gone and done more, but first week of January, didn't want to get greedy and kind of let that run out. Okay, so I'm now going to show you a trade that I lost. So I did lose a trade last week, but again, only where I made 6% on this, I only lost 1% on the trade that I lost. Like I said, it's all about risk management. So this was the trade that I lost. I'm not going to go through it in details, but I'm just going to show you it. What I was expecting was this is the daily view here. It was for GJ. I was expecting a reaction out of this candle here, this daily candle before this big move down and this break of structure. Was looking on lower time frames to seeing what was there. I noticed something here on a 1 hour chart. Had a pending on that, which I shouldn't have. Reason why is because there's these equal highs. Remember what I said about the consolidation, that banks like to take out these equal highs before they're making the shift down, and that's exactly what happened. So at least, like, you know, it's not lost. It's a lesson learned. I've learned what happened. I say I won't make this mistake again. I make this mistake quite a lot. So it's just about being more patient, and looking for this liquidity and seeking the liquidity and getting in on momentum instead of being the liquidity and getting taken out by the banks, which is exactly what's happened here. So yeah, that's an example of a trade that I lost. So yeah, last week pretty good. 1-2 trades, which was that AUD CAD that I showed you, and then also another one on EU. And then yeah, lost a trade on this one. So I think overall over the week, I think I was like 5-6% up. So yeah, good week all in all for that. Right, last but not least, final topic is just on compound interest and just how powerful it is. So you notice, like when I'm talking about the trades, I'm not talking about money, I'm talking about percentages, right? We risk 1%. This here is 1%. My stop loss is always 1%. I never risk more than 1% of my account. And then, so this trade was a 1 to 6 for me. Could have been a 1 to 10. So I could have made 10%, right? This is how you function. These are the numbers that you base on. And it's all because you're trying to compound interest your account. Okay. So this is a compound interest calculator. Okay. I'm going to show you an example about how fucking powerful this is. If you stick to it and if you stay consistent and don't give up and don't over leverage like a dickhead, you can really compound your money into a decent amount. Okay, so say for example, I'll put this in the description as well so you can have a play around. So let's say you start your account off with a 200 quid, right? £200. Let's say okay, we want to do 8%. We want to make 8% profit of that initial balance every week, okay, for 1 year. Okay, so we have this set to weekly. We put for 1 year. Let's calculate this. So £200 in 12 months, we can, if it loads, we can take that £200 to, let's say, nearly 11 grand, right? So you start off with 200 quid. Then you start off by making, £80 a month, £100 a month, £154 a month, £200 a month, and it gradually starts to build up, right? So, I mean, 10 grand in a year, some people probably isn't that much, but from 200 quid, this is super powerful. Let's now say what does year 2 do us? Okay, so this is when it starts to become fucking interesting, right? Once you break through that barrier of earning these small amounts a week, a month, once you start to build that account, and this is when shit kind of gets real to go. So we started with 200 quid. We're making 8% a week on average for a couple of years, right? Just 2 years. We can take that 200 quid to be over £500,000 in 2 years, right? And this just shows you how powerful this can be. You start with £200, you start making 100 quid, 200 quid. This is a month, and this is where people kind of they fuck it off because they're like, oh, I'm doing all this work, all this hours on the charts, and I'm doing this all for just £80 in the month. This is when they start putting in bigger lot sizes, and then they end up blowing their accounts because they lose trades, right? You're always going to lose trades. But if you're just consistent and you build your account to where it's supposed to be, like once you get into the second year and your account say 15-20 grand, you're doing like 6 to 8 grand a month. Obviously you're going to be taking withdrawals, which is fine, but it just shows you the power of compounding that interest and not focusing on the amount and just focusing on the percentage. It's like going to the gym, right? I'll use that as an example. You go to the gym, you're not gonna see any results after the first, you're not gonna get ripped up after one session, are you? It takes months, weeks to see any change in your body at all. It's the same with this. You need to stay consistent, and that's the most important thing, is staying consistent, gradually chipping away at this target, and then it's just mad. Let's see what it is after 3 years. Right? 3 years is a uni course. You're doing a degree, you're doing 3 years at uni. We started with £200. We consistently keep hitting 8%. These are the kind of numbers that you can be getting. So by all means, have a play around with this. It's super important to trade in. It's what everybody's trading plan should be based on. You set yourself a target. Like I said, I have my target, and you just keep working at that. Once you hit your target, you stop for the week. You sit, you reset, you go again. And this is why you never risk more than 1% of your trade. All right, so yeah, that's it. Like I said, I'll put this in the description. As always, my Instagram's in there as well. If you ever want to message me, ask me any questions, anything like that. But I will love you and leave you. Thank you for listening, and I will catch you again next week.